Hey guys, my intention with today's message, as it always is, really is to help you prioritize knowledge over the noise created by my friends, the doom and gloom media, who I have kind of a passionate hatred for. Anyway, today's hot topic is forbearance, or as the media would have you believe, the magic pill that all homeowners who have a mortgage should run out and apply for. Before you contact your servicer, notice I didn't say lender, more on that in just a second. Please understand a couple of things. Number one, know the difference between forbearance and forgiveness. There's a huge difference there. Number two, there really are only about 4 options available to you, and none of them allow you to just skip and forget your mortgage payments. So I own a home, I have a mortgage. Can I skip the next 3 months, the next 6 months, the next 12 months of my mortgage payments? And the simple answer is no, I cannot. I can't simply just skip over them. They will never go away. After I pause them, after I skip 3 months or 6 months or however long, I'm still going to owe those once that skipping period is done. I'm going to call it a pause or a delay because it's not truly skipping over them. I'm still going to owe my servicer, the company that I make my payments to. So why does every news channel, every social media post that I read lead me to believe that I can skip the next handful of mortgage payments? I really don't know why, and I wish it would stop. There's really 2 reasons that I can think of. Number one, the media or social media experts are either misinformed, or 2, they have some kind of an agenda, or maybe a third one, they just don't care. They're just throwing up a bunch of information. So if I can't just simply skip the next handful of payments, then what does this forbearance mean? Forbearance means delay or pause. That's it. Nothing else. Forgiveness means forgive and forget. So if you skip the next 6 months and these are forgiven, done. Forgiven, don't ever worry about those. But unfortunately, that's not the case here. So there's really about 4 options with most servicers. Again, I'm using the word servicer, not lender. We're going to talk about that in a second. First option, a lump sum payment. So if your normal payment is $1,500 a month and you paused for 6 months, you're going to owe $9,000 plus your regular monthly payment of $1,500 a month after that 6-month forbearance period. So at the end of that forbearance period, at the end of that pause period, you'd owe $10,500. That's a pretty big chunk to bite off. Second option, short-term repayment plan. You'd spread that $9,000. Let's say you skipped or you missed 9 months and your payments were $1,500 a month. You'd spread that $9,000 over, say, a 12-month period while still paying your regular monthly payment. Therefore, your new payment for the following 12 months would be $2,250 per month because you'd have your $1,500 a month regular payment. Then you would add that $9,000 spread out over 12 months on top of that $1,500 a month. Still kind of a lot to bite off, right? Third option would be a loan modification. This is where essentially your mortgage is extended by the amount of the payments or the time that you paused that mortgage. So in this example, let's say you had a 30-year term and you only had 25 years left on that term. If you paused, if your forbearance period was for 6 months, once it starts back up, the lender would modify your loan. So instead of 25 years, now you have 25 years and 6 months remaining on your term. Not a terrible deal if you're in a predicament, right? Fourth option could be a mortgage payment reduction option. So this is where your servicer allows you to reduce your $1,500 a month payment by, let's say, half for 6 months. However, after that 6-month period, you might have, let's say, 1 year to pay back the reduction amount. In this case, it'd be $4,500. You go from $1,500 a month, they cut it in half down to $750. $750 times 6, $4,500. So if you're going to spread that out over a 12-month period, that'd be $750 times 6 months equals 4,500. Divide 4,500 by 12, that's $375, plus your regular monthly payment of $1,500 a month equals $1,875 for a 12-month period following that reduction. A little bit softer pill to swallow than, say, option 1 or 2, but still, if you're struggling right now making your minimum payment, are you really going to be out of the woods in 6 months to where you can make your minimum payment plus more? Please understand the bind that this forbearance relief plan could put you in before you reach out to your lender. I would also advise you to be prepared to sit on hold for a hot minute or several. I spoke with an executive last week at one of the nation's largest loan servicers, and they were averaging about 15,000 forbearance applications per day. That's not week or month, that's per day, 15,000 per day. So they're operating at capacity, no doubt, right? These servicers they're inundated right now. Speaking of servicers, this brings up part 2 of my message. Mortgage loan servicers they're getting absolutely hammered right now. The government forbearance plan that we just talked about and the heavy refinance volume is kind of combining for a 1-2 solid punch to the mortgage industry and could be the housing industry going forward, unless the government establishes a plan to kind of soften the blow for servicers. What is a mortgage servicer? This is who you actually make your payments to each month. In most cases, the company that you make your payments to does not actually own your mortgage loan. The servicer, who you make your payments to, actually pays your lender, the actual owner of that loan, for the rights to collect these payments. They pay typically, on average, 1% of your loan amount up front. So if you have a $200,000 loan, they're going to pay roughly $2,000 to the lender who owns your loan for the rights to collect payments. Obviously, they have an angle here, right? They're earning a little bit of revenue on an annual basis for collecting and servicing these payments. They earn about 0.3%. So that 1% they paid, it's going to take them at 0.3%, it's going to take them about 3 years to break even, and then they start making money after that, right? Each month the servicer collects your payment, they earn a little bit of their revenue slice from the mortgage payment pie. Then they send the remainder of your payment to the lender, to the owner of your loan. So the question begs, if I choose this government forbearance relief plan, if I choose to pause my payments for, let's say, 6 months because the government ordered my servicer to allow me to do this, then how does the servicer pay the owner of the loan? Because they're still on the hook. They're still responsible for making those payments. The loan owner, the owner of that loan, is still expecting full payment from the servicer on a monthly basis. Where does this money come from? Now, under normal circumstances, a servicer would have enough revenue shored up to cover these short-term losses. However, with the amount of refinancing going on, and get this, roughly 20,000 mortgage applications per day across the country, this is causing what is referred to as a servicing runoff, meaning that loans that are actually performing well, so loans where homeowners are actually writing the check every month and they're not going with this forbearance program, those are refinancing and being paid off and being booked with another lender who then sells it to another servicer. Therefore, the servicer who you're making your payments to actually loses the performing loans and the revenue they were banking on. To make matters worse, several of the loans that are being refinanced right now today were created less than 3 years ago. The servicer who you make your payments to paid a premium of roughly 1% to the loan owner for those servicing rights. And given that the servicer only makes about 0.3% per year, it's going to take them about 3 years just to break even on your loan, on my loan. So with loans that are being refinanced in under 3 years, which is a vast majority of those right now, these servicers are actually losing money. Plus, they're not collecting payments on the loans that have gone into the government-ordered forbearance program. Yikes! As of today, there's not a great government plan in place to keep these servicers afloat, especially if I were to skip my first payment, right? So let's say I just closed on a home a month or two ago. My first payment is coming up and due, and I go ahead and take advantage of this forbearance plan. If I don't ever make my first payment, then the government right now, there's no plan to help out that servicer. You see, most mortgages are securitized into pools of millions and millions of dollars, and they're sold into the secondary market as mortgage-backed securities, also known as mortgage bonds. You've heard me talk about those before. So investment banks buy these bonds, just like investors buy treasuries or municipal bonds and whatnot. Then they build them into vehicles like mutual funds or insurance plans or retirement accounts, etc. So if I'm not making my payment for 6 months, then the servicer can't make their payment to the lender for 6 months. Then the lender can't pay the investor. Then the mortgage-backed security loses its value and credibility. And if mortgage bonds lose value and credibility, they lose their rating, which if they lose their rating, that's kind of what we saw in 2008, 2009. And we saw where that led to lenders crashing, which led to the housing market not doing very well. So my hope is that the government comes up with a plan to fix the whole thing, not just kind of the front-facing consumer like you and me, which we all could use a little bit of help, no doubt. But we can't stop there. We've got to help the companies and the entities and the vehicles that are behind all of that, all of us, that help us get to buy a home, get loans, and so on and so forth. That was a lot of information. If you have any questions at all, especially about the forbearance program, please just reach out to me. I'd be more than happy to help. I've got a lot of information and a lot of links that I can send your way. I hope you have a wonderful day. Take care.